I joined a capital raising mastermind this winter, and just the number of deals that come out of that, I'm like, shoot, I should have joined this one back when I was just going to be a passive investor. And the access to deals is incredible. The amazing part is the access to do hard money lending, because people come to the group and be like, I need $100,000 for 3 months to bridge this gap to close this deal. And I'm paying 30% on that because I just got to get across. I'm like, what?
Welcome to the Physicians and Properties Podcast, the show where we teach you how investing in real estate can give you the freedom to practice medicine and live life how you want.
Doctor!
Now, here's your host, Dr. Alex Schloe.
Welcome to another episode of the Physicians and Properties Podcast. Thank you for taking the time to be with us for another episode. Today's guest is Dr. Mike McManus. This was a really fun episode. It was really cool to hear Dr. McManus's journey from living in Colorado to becoming a commercial fisherman in Alaska, coming back, working as a ski instructor, and then ultimately a ski director at multiple ski resorts in Colorado. And then from there, going into medical school. We took a very indirect route to medical school, and it was really cool to hear his journey, how that led to medical school, where he became a urologist, and then how that has also led to real estate. He actually started investing in real estate in 2009 while he was in medical school, house hacking his home and a condo in Denver. He started investing in managed single family and small multifamily properties. From there, made the transition into commercial real estate because of the scalability. We talk a lot about masterminds in this episode and how instrumental that can be to let you have the opportunity to leverage folks' time, experience, money, and help you expedite your goals so much faster. It's really important to get in the rooms with the right people, and Dr. McManus is one of those right people. We also talked about how he was able to use real estate and investing in real estate to allow his urology job to become optional. If that sounds like something that you'd be interested in, this is an episode that you definitely want to stay tuned for all the way through the end. So without any further ado, if you learned something from this episode, please take a few seconds, give us a 5-star rating and review, subscribe to the podcast, and let's get started with today's episode with Dr. Mike McManus. Dr. Mike McManus, welcome to another episode of the Physicians and Properties Podcast. So glad to have you on the show tonight. How are you doing? How's Salt Lake City, Utah?
Oh, it's great. And thanks. Great to be here. Salt Lake is starting to be a little less hot than it was. It was trying to act like Phoenix through July.
There you go. Well, I'm glad it's starting to cool down a little bit. And then pretty soon the slopes will be opening up and get you out there skiing. So that'll be exciting.
Yeah, looking forward to that.
Well, do you mind telling folks a little bit more about yourself?
Sure. My path has never been the straight and narrow, for the good and the bad of that. We just moved to Salt Lake. This was kind of a return home. My wife and I both grew up in Southern Colorado. My journey into medicine was not a straight line. After graduating high school, I initially was going to be an engineer, and I went to Colorado School of Mines and then to CU in Boulder. And then I took some time off. During that time off, I worked as a commercial fisherman in Alaska and started teaching skiing. And that really became my first career. I started working in Crested Butte, which was close to home where I'd grown up. And through the course of that career, I worked at Keystone and became a ski school director at and then moved on and worked in Aspen for a few years before going to medical school. It was a great initial career from the standpoint of I worked with great people, developed a lot of people skills, didn't make any money. And that was really where that decision came, like, okay, I need to do something more. The interesting thing was funny. I was just talking to somebody about this and I hadn't thought about it for a while, that I wasn't the greatest student in college. My grades were okay, but really I remember the interview for med school, and really from the amount of time I spent just with people and talking to them about their world and having conversations they like to have, I felt I came out of that interview like, wow, I dominated that interview. That was awesome. I got to talk about what I wanted to talk about and kept the conversation going in my direction. It really, I think, was part of me getting into medical school. I went to medical school planning on being being a family doctor like you. And yeah, I just remember that family rotation was in Grand Junction. And I'm like, all right, this is it. This is what I'm going to be doing. This is part of the world I'm going to be in. It really didn't ring true with me. It was tough. The funny thing is my preceptor, the guy running the rotation, he'd gone to medical school to be a general surgeon. And he came out of it like surgery. I was always wondering, like, did that guy get his blood pressure under control? I should check in on him. He ended up in family medicine. So it was good because we could have those conversations. I was like, I don't know if this is what I want to do. And he's like, well, that's cool. You don't want to do what you don't want to do. So yeah, so I ended up becoming a urologist instead. I don't know if that's the long story or the short story of getting to where I am now.
That's a good story nonetheless. I always tell folks when they're going into med school, you just have to figure out, do you want to be a surgeon or do you want to do medicine? That's like the big hurdle that I feel like folks really struggle with and have to figure out first. I feel like a lot of time medical students feel so much pressure to go into med school and be like, I'm going to be a family medicine doc no matter what, a urologist no matter what. It's like, just enjoy all the rotations. If you can figure out medicine or surgery, it's going to make the decision a lot easier. And that's where you need to start.
Yeah, that does. It's funny. My first rotation, third year, we had a surgical subspecialty rotation where you did like a week of urology, a week of ENT, a week of anesthesia. I was home the week before and our local urologist, I knew his kids growing up and actually had been a roommate with one of his kids during college. And I ran into him and he's like, oh, what are you doing? I'm like, oh, I'm doing urology first. And he's like, oh, that's great. You should be a urologist. I was like, no way, not my cup of tea. He's like, well, be open to it. And it was funny. It was like it's kind of like you find your people. And so it was the group of people I resonated with. It's kind of funny looking back because I've heard of some of the other programs in different places. If I'd been a med school student in one of those, I probably would have been like, you guys are not my people. It's an interesting thing how you end up where you end up.
It's true. I do feel like each specialty does have their own personality and you figure that out. And that's a big part of it too. Well, Mike, how did you go from skiing director of the ski school and skiing all the time to medicine? Was there a moment where you're like, I'm sure it probably wasn't just the pay. Was there a moment that was like, hey, let's do this. Let's go to med school after skiing these beautiful mountains for years?
I reached a point where I had, and this kind of became a theme in my life, that I kind of achieved 90% of what I ever set out to do. I was kind of bored. Like it was really fun for a while because I was learning, I was getting better. I was learning about teaching and people and skiing and then moved into management and it was a whole different learning curve. And then I kind of hit a spot where it's like, I'm kind of bored. I'm bored and I'm broke. Medicine was one of the things I'd considered through my extended college career. By the time college was over, I was like, I don't want to do anything that intense. At that point, after kind of burning out in ski school, I was like, I want something more meaningful. I want something that will provide me with a challenge for the rest of my life. And I was kind of coming back to, I'd taken all the pre-med classes in college. The hard part is I never took the MCAT. I was at that point 28, 27. The basic science classes I had taken in the late 80s. Man, I remember that like digging in and being like, okay, I can do this. And like, you're wondering like, did I ever take this class? But that was, I think, kind of, it was looking for a new challenge and kind of going back to what had been part of my plan before I'd been distracted into the ski industry.
Well, it's a cool journey. I did see today actually that Eldora Mountain is for sale. If anyone's listening to this and they want to partner with Mike and I, we're going to put in an offer and take it down. I saw that today, which is pretty crazy. My two partners, we all love skiing and we actually have an Airbnb in Blackhawk, Colorado, right near Eldora. We're always joking about like, we should buy a ski resort. So I sent that to him. I was like, what do you guys think? But we don't need any more shiny objects right now.
Wow. Let's see if we could take down Eldora. It's actually a storied history. One of the guys was our kids manager while I was the ski school director, and he still teaches in Aspen. His grandparent developed the resort. Wow. In the beginning. It was later bought. When I was there, it was owned by the same guy who owned Heavenly Valley. I think they might have sold Heavenly to Vail at this point, but it was interesting. The co-owners, one came from that, and the other guy was an older guy who I think had developed Copper Mountain. It was part of bringing Copper Mountain into being. It's an interesting history, and you look at the people who came through the ski school there. They had a turnover of ski school directors like every 2, 3, 4 years for forever. But there were some players. I was just looking at somebody's bio here in Utah who was a guy I knew 20 years ago. And I was like, what? He was the director at Eldora too at some point. Like, so almost everybody, it was like a stop in the roads. That'd be interesting to own Eldora. Did you see how much they're looking to get for it?
I couldn't see it. It said JP Morgan was representing them. I think the owner was the same guy who started Copper, because they had mentioned that they were selling Eldora, a resort in Vermont, and another one, not in Colorado, and that they were holding on to Copper in one other place. It was really, really interesting. I think the Vermont resort had already sold, and then Eldora, they just listed. So yeah, we'll see. I'm interested to see what it sells for. I mean, gosh, how cool would that be to own a ski resort?
It's funny, the number of people, we just moved to Utah from Green Bay, and we had a place, I guess we still have a place in Marquette, Michigan, up on Lake Superior. The Marquette Mountain's a little ski area there. Actually, one of the ones with some better terrain compared to most Midwestern ski areas. It's a pretty cool little place. But I guess it had been through a rough time where it was barely open, and they talked about the city taking it over, but it just recently got a new owner who's a guy who grew up in Michigan and was in the construction industry. He was like, I'd always wanted to own a ski area. He hit that point where he was kind of semi-retiring, and I think sold his construction business and bought a ski area instead.
That's so cool. Marquette, Michigan's beautiful. I spent some time up in Michigan in the summers working out at Young Life Camp up near Lake City, about 30 minutes south of Traverse City. It's beautiful. Michigan, I think, gets kind of a bad rap because people just think Detroit, which is improving a lot now, but northern Michigan is just absolutely beautiful.
Yeah, I saw somewhere that Michigan has, if you include all the lakes, because you look at the amount of shoreline on the Great Lakes, but the number of small lakes and rivers that are there, that it has more shoreline than any state except Alaska.
I like it. How did you get from urology to real estate? I know you were, as a med student, you house hacked, right? Is that correct?
Yeah, that was my first coming out of the ski business where I had no money. I was completely broke. So you get into medical school and all of a sudden they want to loan you all this money. I'm like, dang, I'm living fat. I bought my first place in Denver in the middle of medical school. And it was kind of when that east side of Denver was really starting to boom. It was an interesting project. The guy actually, they took an apartment complex and they condoed it out and refurbed it and sold it. I bought one of those. It had an unfinished basement, finished the basement and put another bedroom and a bathroom in the basement, and then got 2 roommates. And basically their rent paid my entire mortgage. I essentially lived for free for the last 2 years of medical school, turned that and sold it for about a 50% profit. Was like, okay, I like this. That's the house hack thing. As an intern, we bought another place in Pennsylvania where I did my internship. I was like it was a little mining town, Danville, Pennsylvania, Geisenground, and was this little half duplex. It was like 100 some years old. The public records it was around when the public records started. We bought that. This is crazy now where you look at what's happened in prices in the last 30 years. We paid $40,000 for it. I think our mortgage was like $200 a month. It was a disaster. The person who had lived there actually was schizophrenic and died in the house. We're like, oh, it's probably haunted. Wow. We refurbed that. It was in bad shape and we sold it for like twice what we paid for it a year later. We did well on it percentage wise, but it wasn't a huge amount of money. The deal I missed is when we left Pennsylvania, like the Appalachian, it was old coal country and was totally depressed. There was land that like you could pay like 1 year back taxes and own it that just nobody owned up in the hill country. I was like, I'm looking at this stuff and I tell my wife, look, we could buy 10,000 acres for $10,000. She's like, why would you want to do that? I'd be like, I'd be a land baron. She's like, that's the dumbest idea ever. Well, it turns out if we had done that, that was in the heart of what became the Pennsylvania and New York fracking area, where when fracking came along, it turned out, I know this now because of the time I spent in Wyoming, and everybody was working in the oil business, that one of the biggest challenges they had is when the big drillers came in, is putting together a land package big enough to drill on. And my buddy was like, oh, dude, that would have been billions. I'm like, well, you don't get lucky enough to stumble into billions. So that was the real estate deal I missed. At that point, kind of gave up the investing thing. We bought a house in Richmond, Virginia, where I did my residency, but that was more like bought a house, did okay on it, got out of that one right before the market turned. But then my first job out of residency, we went back to Colorado and was in Durango. We bought a house there at what had to be the peak. We were within a month of the peak before home prices crashed in 2009. We left Durango because we ended up, there were like 5 urologists and there needed to be 2. We couldn't sell it. It was one of those, we were totally upside down. down. We're like, well, let's get back into real estate and we'll rent it. We rented it. Our renter was a total con man. I think we got like a half month's rent before we evicted him, which involved the sheriff. We had to bring the sheriff in to get him out. And that was a whole fiasco that even like I parked on the wrong side of the street and he called the police and the sheriff's there evicting. The police come and give me a ticket for parking on the wrong side of the street in a residential neighborhood. Like it wasn't a busy street at all. I'm like, whatever. So that kind of turned me off to real estate, to investing for a while. I was like, that's a mess. We came back into it when we bought the place in Marquette. It was during COVID. There were people looking to get out because they weren't sure if they'd ever collect rent again. Especially Michigan was one of the states that was just basically saying you don't have to pay rent. We bought a place up there and that did well. We still own it. We just finally turned it over to a property manager. My goal at that point was I was going to build a small portfolio of small duplexes, quads, and that was going to be my little real estate empire that would provide me a retirement. I kind of had this vision that like, yeah, I'd self-manage them and do the maintenance and all this, and I quit being a doctor. It didn't take long before you realize that property management is not something you want to do yourself. If you're going to scale and have employees and own a property management business, and I would consider at this point, I got lucky that in that post-COVID era, prices went up so fast as interest rates went down and nothing penciled out for forever. I mean, I think we're still kind of there that you're like, well, people were buying rental properties on the assumption they would continue to appreciate, even though they cash flowed negative. We just couldn't buy anything. I started going, okay, so how do I get beyond the retail investor? That's when I started investing passively in syndications, which considering what happened with a lot of syndications in that period of time, I've done okay out of that. When I started into that, the one thing I did smart is I'm like, you know what, I can read about these all day, but until I do it, I'm not going to learn. I was looking for the lowest dollar amount I could invest in syndications. And I've seen what a lot of people did well and didn't do well. Had one that they knew they were going to be upside down right out of the gate, started marketing to sell it right away as soon as interest rates jumped. And we managed, and they got out. I still made like a 13% return on it in like a year and a half. It did okay. Everybody else froze their prefs and haven't really gotten a lot of income stream out of them, or they're coming in at like 2%. The one who actually did the best at maintaining the cash flow is the one who's now making a cash call, a capital call, which turned out they probably should have frozen the prefs. But it's an interesting thing I'm looking back through is they were really self-storage guys who got into apartments and they made a lot of mistakes. There was a bunch of deferred maintenance and a bunch of CapEx that was required that they didn't anticipate. And that was really when the capital call came. I'm like, you guys messed up on your financing. You did short-term financing at historically low rates where you could have locked in the whole thing at like 3.5%, but you went for the short term at 2.5%. They did that. They're still talking about interest rates coming down and making things better, which you can't factor that in. They didn't do a good evaluation of the property. They missed a bunch of deferred maintenance. And so the CapEx was too high. I'm kind of like, dude, I'm not giving you any more of your money. Look, I only had like 20 grand in that project, but they want like 9,000 from as my portion of the capital call. I'm giving you another 50%. I'll take my hit, sell it. Like you guys got to take your hit too. So going through that syndication process, I was still looking for deals on my own. I really found it more interesting, the non-residential stuff. I'd really say what turned the corner there, it is, we were talking before we started about the network and who you know. The things that changed it for me is I hired a coach, a real estate coach, which wasn't cheap. He kind of hooked me into some different podcasts, and one of them being the Best Ever Show, because it was Trevor McGregor who got Joe Fairless started with the show and with his whole deal. Listening to the show, the ones that I loved were the Ash Patel episodes, because Ash talks about the non-residential, invest beyond multifamilies. He'd started a mastermind and had a conference like the second year that they really just started. They were having get-togethers, just like 40 people get together, hang out, have a good time. I went down to Atlanta and that's where I met him personally and joined his mastermind. It really felt like being back in ski school, but making money in real estate. Just an incredible group of people, a lot of fun. But that really is what gave me the confidence. Like now I have the people, if, you know, and he stopped the mastermind because he's like, we got enough people here. It's getting too big. This is not my goal is to run 1 million people through this. We meet once a week. We slow down during the summer, but basically you bring all your deals to the group. And it's funny, some deals just get shredded and they're like, why are we still talking about this? This is a dumb deal. Unless you want to work really hard for just a little bit of money, this is a bad deal. But other deals, the group finds the golden lining to it, or maybe something in the lease or something. And it gave me the confidence going, okay, I'm not going to make bad deals that are going to end this whole adventure as fast as it started. So that they kind of said, all right, now I'm going to start heading towards the end of my full-time medical career. And that's really where it began.
That's awesome. What a great story. And I agree. It's all about network, and masterminds are so important, or at least having that community around you that can support you and can help you. I think part of it's kind of what you said, like different folks think about different deals differently and see them through this different lens, how we see things in medicine through a different lens, myself and you probably do, of course. It's just having that experience and having the ability to utilize other people's experiences so you don't make the same mistakes. Just that alone is worth a mastermind. And I'm part of a mastermind. I've been in it for 4+ years. It has been an absolute game changer for me. It's the same thing. It's just having the community, having the accountability, the information you can get. It's the implementation that's the hard part. Having the courage to take action and knowing, hey, these folks are in my corner. It's another layer of protection as I'm going to buy another deal that I can run this by these folks. It's just really important for folks to have that. That's why we started the Row Room Mastermind for residential assisted living, because that just doesn't exist in the residential assisted living space. We've partnered with a bunch of experts who come in and they teach on the things that we don't know or don't have a lot of experience on. Like we're not hands-on operating a lot of our homes. We'll bring the best operators we know to come in and teach on that and be part of the community to help folks network and grow and expand their own operations and stuff as well. I think that the mastermind and community model is the way to do it. I think courses are going to fall out of favor over the next few years, and it's really going to be all about community and masterminds.
Yeah, because the courses, and I took some courses, and the courses, the information's good, but the information in the courses is all available on YouTube. The course organizes it, but there's value there. I think for doctors, the big thing, when you look at the price of masterminds, doctors are like, what? You're going to spend $20,000, $30,000 on a mastermind? It's really hard to do that the first time. It's a big jump. But then when you realize that the value of that in the first 2 months in the mastermind, the deals that come out of the mastermind the mastermind would have been worthwhile just as a passive investor, just to show up and get access to deals that otherwise there's not access to, because there's people in our mastermind, they'll do deals that they'll turn in 12 to 18 months. And you go into it going, okay, if this deal goes sideways, I'm going to make 30%. If it does well, it could go the other way. It's hard to find deals like that because people who put those together don't have a hard time raising capital. And pretty quick, they got a core group and people are like, where's the next deal? I got money. The first deal I invested in passively out of the mastermind totally paid for the mastermind.
That's awesome.
Right there, I was, okay, that was great. And then I kind of really became a big fan of some of the courses and masterminds. And I did an AI course last fall. Just as I was doing the AI to try and figure out how to use it in real estate. While we're digging into AI, I'm listening to this AI podcast and they're like, this was like probably a year ago now. They're talking about, they're like, NVIDIA can't keep up making chips. Facebook or Meta has $1 billion in chips order waiting, and Google and OpenAI and everybody. I look at their stock price. I'm like, it's up 20%, but it's got to be up more than that. So I plunked some money in NVIDIA and 5 months later it doubles. Usually my stock market experience has not gone well, but paid for the course. I'm like, all right, whether I get anything out of this, not now. Before the course was over, I was well ahead on the price of the course.
That's awesome.
These are just the things that when you put yourself in that environment outside of the doctor's lounge with people who really do this stuff every day, the amount of learning is extraordinary, and the opportunity to invest in things to make money. And you spend enough time around people that you really get to know them and you know they're quality people. And that's hard to do sometimes when you're trying to interview syndicators and kind of, who is this person I'm giving my money to?
That's very important to make sure that your goals align with them and the opportunity they're offering you is a good opportunity for you. That's super important. I agree. We don't get any financial education as physicians, and we get so much medical education. And I think that overwhelms folks, is that I feel like they just don't know what's next or don't know how to evaluate a syndication or anything like that. You have a great podcast. There's a lot of opportunities out there to learn. But I tell folks all the time, if you were able to go to medical school and residency, you can absolutely invest in real estate, because part of it is just working hard. And then another part of it is managing people, which is what we all do for a living. It's really not that hard if you just just put the time in. And to expedite that time, join a mastermind, join a community, spend a little bit of money so that you can decrease the amount of time it takes you to get that first deal that then pays off the mastermind and sets you up for success so much faster than if you just keep kicking the can and keep listening to a podcast here or there.
And I think even joining a mastermind that's aimed at being an active investor, even if more of your intention is to invest passively, if you're like, I'm a full-time doctor, I don't need to run an apartment syndication, but people you meet in the masterminds who are doing it full-time and are active syndicators, you'll get to know those people. You'll spend enough time around them that you're like, okay, this is a quality person, that guy I don't know about. And they'll start to do deals and you'll be there in the front row of having access to those deals versus just looking for random people. I joined a capital raising mastermind this winter, and just the number of deals that come out of that, I'm like, shoot, I should have joined this one back when I was just going to be a passive investor. And the access to deals is incredible. The amazing part is the access to do hard money lending, because people come to the group and be like, I need $100,000 for 3 months to bridge this gap to close this deal. And I'm paying 30% on that because I just got to get across. And I'm like, what? I'd heard about people doing hard money lending and making crazy. Where do you find that? And all of a sudden, like there's people out there going, somebody please help me across the finish line with this deal. Because if the deal is going to make them 2 million, but they've got a shortfall of 100 grand, you're like, okay, so I'm going to give up 20,000 of my 2 million to get the 2 million.
Right. Right. Yeah. Broader view. Yeah.
It's not a mastermind for investing. It's a mastermind for actually raising money. But you get into those groups of really serious people and you get exposure to deals that otherwise you don't see.
Those people with the experience that are often willing to help and they're willing to pull you up with them. And you're able to grow so much faster than you ever would. And you never know where that networking is going to take you, where those opportunities are going to take you. It's just incredible. I don't know why everyone doesn't do it. I really don't, to be completely honest. Our mastermind is nowhere near $20,000, but even the one that I'm in now, I got in right when it started. It's $600 a year and I'm locked in for life. And that's because it was right when they started. That has probably made me, or will have made me, well over millions of dollars over time. And it's just from relationships and opportunities that we're in that. Relationships and networking are really the key to really succeeding quickly in the real estate game.
Absolutely.
I know you're working on a few deals coming up soon, right? Outdoor industrial storage.
Yeah. So that's one where right now we got a shortage of it in this area. Again, it's who you know, connected with a nationwide operator to joint venture on doing something here in the Salt Lake Valley. We'll hopefully have that going live here in the relatively near future. I'm excited about. The goal is to do more than one over the next couple of years, do a little series of them. It's a great space because the amount of capital required to build it is minimal compared to building buildings. The amount of work required to run it is, I can't say I'm in the middle of operating it yet, but with all the people that I'm talking to are operators there, it's really a pretty simple thing because it's a yard, it's a fence in a good location with the people put a bunch of big equipment in and pay money to do that.
Is it mostly going to be like construction equipment and larger vehicles, or are you also going to have campers and RVs and stuff in there as well, and boats?
We may do, if people really want to do the boat and RV, there's a decent amount of boat and RV storage that is just boat and RV storage and is kind of set up to more cater to those folks. Where the cool thing with this model is we're looking more, some of it's construction. Some people run a whole business out of it, like a landscaping business, because we're separating the yards. It's not just one big open space. The ability to put some containers in there, and we have some containers that provide office space. So there are some people in some of the other locations that they'll run the whole business. They'll put an office container in there and have one staff person who is on site all the time. Some pretty cool video technology now. It'll alarm whenever anybody enters your yard, and you can actually be like, have a customer there picking stuff up on their own and be like, no, it's not that one. It's a thing that's coming of age where it used to be more a lot with trucks and equipment parked on it, but this is kind of taking it to the next level without being flex space self-storage warehouse, which takes a lot more to get up and running.
How many units do you think you'll have? Or maybe units isn't the right way to describe it, but how big do you think this will be?
The minimum size we're looking for is about 4 acres. Less than that, it's not big enough to get scale to make it really make sense. What ideally I'd like to see is I'd like to at least have access to control 10 acres on one of these deals to where we have some room to grow. This valley being a narrow valley, it's been tougher to find the space we want than we thought it would be. It's amazing the cost of a chunk of desert right now. It's taken a little more digging and is going to take a little more work than initially me or the other partners thought it would. But we're going to get this one to the finish line sometime here in the next few months.
What does it typically rent out for? I'm sure it's kind of dependent on size and whatnot, but what sorts of returns are you guys looking at?
It varies. The location is what varies on what you can lease it up for. Some of that is the decisions you have to make when you do your construction is how solid, how much money you want to put into how solid you want to make your base, which ideally it's road grade base. A premier location will be 25 cents per square foot, which doesn't sound like a lot. If it's a super premier, like you get into the city, sometimes you can go multiples of that higher just because access to storage within the city can be really difficult. People will pay more for it so they don't have to drive 10, 20 miles to get to their yard. It varies a lot, and that's part of the whole underwriting is really developing the understanding of what can you rent this location for versus what can you buy it for. Is your location one where you're going to have trouble with theft? And that, okay, this looks great. It's middle of the city and easy to get to and great rates, but now your insurance is going to double and you're going to have a full-time security guard, which is going to add to your cost. So that's part of like every location has to be underwritten individually, taking all those things into account.
Makes a lot of sense. Thanks for sharing that. Mike, how has real estate for you let you practice medicine part-time or practice medicine how you want to?
I guess I kind of reached the point with medicine where it was kind of the same as with ski school. I kind of hit this point of burnout where I was a little bit bored. I was doing the same thing every day. As complex as a surgery may be, most of them are kind of the same. There was a point I remember looking at one of my partners who just loves urology and loves to operate. When we were talking about it, I'm like, I think I might be done. He's like, really? You're not having fun anymore? I was kind of jealous. Like, I wish I was still having fun. It reached a point where I was like, okay, this is something that eventually will replace what my income was. When I reached that point, I wish I could say it was a smooth transition, but it wasn't. I went through burnout like a lot of doctors have. I got really frustrated with the way they were running the hospital and the way it was killing my time and lack of efficiency. That became my biggest frustration to where I just didn't want to be there anymore. We were in a practice that was set up to share everything equally. Tried to find a solution to working part-time in that practice for a couple of years. Couldn't get there. So decided it was time to take the jump and left the practice. Well, I quit working full-time end of last year. Left the practice in May when my youngest daughter graduated from high school, which was kind of the finish line, and decided we were going to move back to the mountains. I thought I was going to do more locums. I haven't been really that excited about it. I was just right before we were starting, I was emailing back a locums recruiter going, I don't want to, and they were looking for like 10-day stretches. And I'm like, I don't want to do this for 10 days in a row, especially now that we just signed on the bottom line to develop this outdoor industrial storage. I'm like, man, it's go time here now. I don't know if I have 10 days to be away right now. So yeah, it's an interesting thing. You step away and the paycheck goes away. It's been hard. It's not like there's not money there, but to see all the bank accounts going down instead of up, it's a little bit unnerving. But if you make the plan ahead of time, and it was really just having the right people in place that I finally found a financial advisor who is high level, like family office type stuff that I had never had access to that kind of money management before. And what I would have saved, if I would have known her 10 years earlier, I'd saved millions of dollars in taxes. It just altogether kind of gave me the confidence to say, I don't have to do this by the rules anymore. Although my streaming income from real estate has not replaced my income, has not replaced my living needs yet. It's building, it's getting there, and it's not a get rich quick thing. You just start building it and it gets bigger and bigger. I wish I would have started earlier, but now I got the people around me that I need to get the job done. That's kind of the key.
That snowball is going to keep rolling and getting bigger and bigger for you, Mike. I'm excited about that for you. Well, if folks are interested, I know you guys are starting a fund tier soon, and of course, the outdoor industrial storage is coming up as well. If folks are interested in learning more about those products, products or listening to your podcast, where can they find you?
My podcast is called Surgeon Syndicate, and we focus on some doctor stories, but try and focus more on the industrial and retail side of investing in real estate. You can check us out on all the different platforms, Apple Podcasts, Spotify. The website is surgeonsyndicate.com. If you wanted to book a call and talk, if it's finding a way out of medicine or investing in real estate, any of that, let's have a conversation. We'll get you started on the path that you want to be on. My other company, Fortress Capital, after I started, I found out there's some other Fortress Capitals out there, including one of the largest private equity firms in the country. But so far, if I get big enough that they come after me, that'll be a sign of success. Our website is thefortresscapital.com. You can also, like the Ohio State, you can also book a call through there to connect and say hello. I'm on social media. I have to say, I've not been good about checking it recently. I try and check LinkedIn more often. I've trying to get my assistant set up to do that, but I just offloaded the podcast production from a production company to her. She's busy. I think the best way is really through the website to book a call, and we can talk. For any fund or syndicator, for a lot of docs, they're nervous about making that call. I always tell people, if you're feeling a heavy sales push, that's probably not the person you want to be talking to anyway, because really the goal of any call is finding out what somebody's goals are, what they want to achieve, and if it's a good match. Because from the standpoint of somebody running deals, the last thing you want is investors who've got a different idea about what you're doing than you have, because it becomes messy for everybody. And then nobody's happy with the outcome. That's part of having calls, is call and talk to people and find people to invest with who you like, who you kind of see the world the same way, and get along easily there.
That sounds great. Thank you so much for your time. We got to hop off this and work on the LOI to purchase Eldora. So
All right.
Just want to be respectful of your time. Thank you so much for coming on the podcast tonight.
Oh, great being here, Alex. Thank you so much for having me. It's been a lot of fun.
Absolutely. With that, it's been Dr. Mike McManus and Dr. Alex Schloe with another episode of the Physicians and Properties podcast, signing off. Hey, real quick, if you're still listening to this, I'm assuming you got value from it. So I need your help specifically. My 2-year vision with this podcast is to help 100,000 physicians learn how investing in real estate can give you the freedom to practice medicine and live life how you want. There are 2 main ways that a podcast grows. One is through ratings and reviews, and the other is word of mouth. If you can please leave me a 5-star rating and review on Apple Podcasts and Spotify, as well as send this to 1 to 2 friends that you think would get value from it, we can reach the physicians that we want to reach. Thanks in advance, and talk to you on the next episode. Please note that the information shared on this podcast is for informational purposes only and should not be considered financial or medical advice. The views expressed on this podcast are those of the host and the guest and do not necessarily reflect the views of the Department of Defense or the United States Air Force.